Well, it started in early 2018 when the US administration under President Donald Trump imposed unilateral tariffs on washing machines, solar panels, steel and aluminium that the US imports from some of its major trading partners. In particular, China, which received the bulk of the US tariffs late into 2018. Trump has said that he wants to reduce the large trade deficit that the US has with China. The US is also accusing China of stealing intellectual property from American businesses. It claims that American businesses have been forced to transfer their technologies to the Chinese partners. China's response? Well, China has denied IP theft and accused US in return for starting the biggest trade war in economic history. In 2018, there were tit-for-tat tariffs between the United States and China. By now, the US has targeted a wide range of Chinese products, ranging from industrial items like railway equipment to consumer items like handbags. On China's list, it was American products such as medical equipment, chemicals, coal, and more importantly, big US agricultural exports such as soybeans coming from states that had strong support for Republicans. In December, after months of hostilities, both parties finally agreed to a truce. That paved the way for talks. And even up till April 2019, a trade deal had looked promising. It was not only until earlier this month when tensions escalated again. On the 10th of May, US said that it was raising tariffs from 10% to 25% on $200 billion worth of Chinese products, such as internet routers and modems. 3 days later, China retaliated with higher tariffs on a revised list of $60 billion worth of American products, including frozen vegetables and liquefied natural gas. Trump has said that he is looking at more tariffs on $325 billion of Chinese products. This time round, more consumer items will be included on the list, such as cell phones, computers, clothing, and footwear. Now, if this comes true, US tariffs will be applied to nearly every product that the US imports from China. There was a recent joint study conducted by researchers from some of the top US universities, which said that the tariffs have actually cost the US economy some $8 billion in lost GDP last year. And some other research have shown that American consumers may have been paying more out of their wallets ever since the tariffs were in place, because some of the businesses have passed on these price increases to consumers. One such study put the cost at $11 per consumer for each month. Over in China, trade tensions come at a time when China is already trying to manage a slowing economy, as well as manage other challenges that it has, such as high debt levels. With China's retaliations focused disproportionately on the US agricultural sector, American soybean farmers, for instance, have been struggling to sell their produce now that their biggest buyer, China, is out of the market. US tech giant Apple partially blamed trade war for its revenue decline over the first 3 months of 2019. Some analysts have said that if further tariffs do materialize, then Apple may have to raise prices of its iPhone XS by about $160. This is to cover higher costs of components coming out of China. If it doesn't do so, then its earnings may take a hit moving forward. With the recent escalation, financial markets from Asia, Europe to the US have seen steep declines. A full-blown trade war will also disrupt global supply chains, impacting countries that play key roles in these supply chains. Now, these will include Asian exporters like Singapore, Malaysia, South Korea, and Taiwan, based on these economies' trade openness and exposure to the global supply chain. Already, Singapore has seen slower growth in second half of 2018. This is largely on the back of slower global demand for semiconductors and tech gadgets, which has pulled down growth in the key manufacturing sector. So more uncertainties and more downside risks in the global economy will not be good news for Singapore's open economy. On whether these tariffs will push up consumer prices here in Singapore, while there may be instances when goods imported from the US and China have components that are subjected to these tariffs, economists that I spoke to said this is too early to tell for now. However, it is not all negative. Some analysts have said that the search for import substitutes and the rerouting of global supply chains may benefit Southeast Asia, simply because of the region's geographical location, strong supply chains, well-established distribution network, and a sizable workforce with low labor costs. So far, both parties remain in talks and presidents of the both countries are set to meet next month. While some experts have said that the latest disagreement mean that deep differences remain, they have also said that the US-China dispute actually goes beyond trade and is a power struggle between two superpowers with very different worldviews. They said that this rivalry could well continue and extend into other areas such as fighting for leadership in the crucial technology sector. In a nutshell, the battle between the US and China may be here to stay for a while longer.